Walk through almost any U.S. city today and you can feel the change. Construction zones are everywhere. Warehouses are expanding at the edges of towns. Healthcare facilities are being redesigned, and businesses are quietly retooling how they operate. What is striking about 2026 is that growth is not being driven by flashy consumer trends or sudden booms. Instead, it is being shaped by slow, structural shifts in how the U.S. economy actually functions. The sectors attracting the most attention are the ones solving long-term problems, not chasing short-term excitement. One of the strongest areas heading into 2026 is infrastructure and industrial services. Years of deferred maintenance and underinvestment are catching up with both the public and private sectors. Roads, ports, power systems, and industrial facilities are being upgraded not for expansion, but for reliability. Companies involved in construction services, engineering, industrial equipment, and maintenance are benefiting from multi-year demand cycles. What makes this sector especially resilient is that projects are often backed by long-term budgets and planning commitments, making them less sensitive to consumer sentiment. Advanced manufacturing continues to gain momentum as businesses prioritize control and consistency over sheer scale. U.S. manufacturers are investing in automation-heavy production systems that reduce labor dependence and increase precision. This is not about replacing workers overnight, but about stabilizing output in an unpredictable labor market. Companies supplying industrial robotics, factory software, quality control systems, and specialized components are becoming critical partners rather than optional vendors. The growth here is methodical but durable. Energy-related sectors remain central in 2026, though the focus has shifted away from simple narratives. Instead of choosing between traditional energy and renewables, businesses are investing in systems that improve reliability and efficiency across the board. Grid modernization, power storage, energy management software, and industrial efficiency solutions are seeing strong demand. Rising electricity usage from data centers, electrified transportation, and manufacturing is forcing companies to think about energy as infrastructure, not just cost. Healthcare services and operational support represent another major area of sustained activity. The aging U.S. population, combined with workforce shortages and rising complexity, is forcing healthcare providers to redesign how care is delivered. Companies that help manage logistics, staffing, diagnostics, billing, and compliance are becoming increasingly valuable. Rather than betting on breakthrough treatments alone, the sector is focused on making existing systems work better at scale. Enterprise software remains important, but the nature of demand has matured. In 2026, businesses are far less interested in experimental platforms and far more focused on tools that reduce complexity. Software that improves financial visibility, compliance, cybersecurity, and operational coordination is outperforming categories built around rapid expansion. Reliability, integration, and long-term support are now more important than constant feature releases. Cybersecurity continues to stand out as a sector with consistent demand regardless of economic conditions. As more operations move online, the cost of disruptions keeps rising. Regulatory requirements, insurance standards, and customer expectations are forcing companies of all sizes to invest in security infrastructure. What is notable in 2026 is how broad the market has become, extending well beyond large enterprises into mid-sized and traditionally offline industries. Logistics and supply chain services are also gaining attention as businesses prioritize resilience over maximum efficiency. Recent disruptions exposed how fragile global supply chains can be. In response, companies are investing in better forecasting tools, regional warehousing, and flexible transportation networks. Businesses offering supply chain analytics, inventory optimization, and logistics coordination are benefiting from this shift towards stability. Professional services tied to compliance, restructuring, and risk management are quietly expanding as well. Economic uncertainty and regulatory change are pushing companies to seek outside expertise. Accounting, legal, consulting, and advisory firms that specialize in operational efficiency and regulatory adaptation are seeing steady demand. This reflects a broader business mindset focused on avoiding mistakes rather than chasing aggressive growth. Real estate-related services are evolving rather than disappearing. While traditional office development remains under pressure, industrial real estate, data centers, and specialized facilities are expanding. Companies that support property management, infrastructure upgrades, and adaptive reuse are finding opportunities even in a challenging environment. The emphasis is on making existing assets more productive. Consumer-facing sectors are becoming more selective in 2026. Businesses tied to essential needs and value-oriented spending are more stable than those dependent on discretionary purchases. Grocery, discount retail, repair services, and value-focused dining continue to attract attention because they align with cautious consumer behavior. Volume and efficiency matter more than premium branding. Financial services infrastructure is another area of steady growth. Payment systems, compliance platforms, risk analytics, and cash flow management tools are expanding as businesses modernize financial operations. This growth is driven by necessity rather than speculation, making it more durable over time. Education and workforce development services are also emerging as important business sectors. Skills gaps and changing job requirements are forcing companies to invest in training and reskilling. Businesses offering corporate education, credentialing, and workforce analytics are becoming part of long-term planning rather than optional expenses. What connects the hottest sectors in 2026 is not hype or rapid expansion, but alignment with reality. These sectors address structural challenges like labor shortages, aging infrastructure, regulatory pressure, and operational complexity. They are built around long planning cycles and predictable demand rather than sudden surges. As businesses look ahead, durability is becoming more important than speed. The sectors attracting the most attention are those designed to perform under uncertainty, providing stability instead of spectacle. In 2026, the most compelling business trends are not about dramatic disruption, but about quiet, steady adaptation, shaping the future of the U.S. economy.